Reversal trading is the easiest way to create high risk-reward ratios within your trading strategies, but it can be very difficult to know when to buy dips so that they don't just keep dipping on you. I'm going to buy AMC at 50 because it looks like it's primed for a reversal. Nope. Well, what about Block at 200? This is a solid company and looks like it's set up at support here for a reversal trade. Absolutely not. So how do we know which dips to buy? How do we know which stocks are going to reverse and which stocks are just going to keep dipping? In today's video, I'm going to give you a strategy that I have proven works to identify and profit off of reversals. I want to start with the type of stocks we're going to be looking for in order to trigger setups for this reversal strategy. We're going to be using our runner's scanner. This is a scanner that we use for a handful of strategies that I use to profit off of. It is a scanner that scans the daily chart for stocks that have been strong for multiple days in a row. You will notice BLNK here is on the scanner, and that's the stock we're currently looking at, and it has been returned for the last 4 days. This is a custom watch list column that shows you how long the indicator has been on the scanner, so you can sort and figure out which stocks have been the strongest for the longest. And it's been on for the last 4 days because of this percent change open indicator right here next to my face. Once this gets over 30, it's on the scanner. It's 1, 2, 3, 4. It's still on the scanner today, but today will be the last day it's on the scanner, barring a miracle. The markets are still open, but barring a miracle, because today is not going to break a high. This is a recent change I have made to this scanner. It only returns stocks that are in front side now. Before, I just had it returning any stocks with percent change over 30, but you end up trading a lot of backside moves with that, which you want to avoid. When you're looking for reversals intraday, like we're going to be doing with this strategy, you want to be looking to buy dips on stocks that have the bullish tailwinds behind them, right? They are multiple days strong. Bulls are looking for any excuse to buy this stock, right? That's the kind of stocks you want to be returning. But BLNK, once again, will not be on the scanner because of the second part here that I've added, that the stock must have broken multi-day highs in order to be on the scanner. So if I go ahead and click through, you will see some of the stocks we're going to be looking at: EJH, IBRX, SHOT, STNE. You will notice all very strong multi-day stocks, which are currently breaking to the upside. They are all currently making new highs, at least as of the bar from yesterday. All right, so we have identified why reversal trading is so powerful, and we've identified the types of stocks according to their daily charts that we want to be looking to trade with this strategy. Let's now jump into the 5-minute chart, which is going to be the time frame for this strategy, and let's break it down. So what you're doing and what your entrance is you're looking to buy a stock after it has started to break back up. Not just buy dips. We're not looking to just buy red. We're looking for stocks that are red intraday, at least. Remember, strong daily stocks that are weak intraday that begin to curl back up. What's the easiest indicator to use to do this with? It's RSI. What are we doing? RSI crossover. When the RSI crosses back over 40, that is your entrance. This bar closed with the RSI back over 40. We bought the close of that bar. Our profit target is when the RSI crosses over 60. That's where we plan to sell. And our stop loss is entry price minus ATR multiplied by 2. ATR being average true range of the last 14 bars. So it's measuring the ticker's volatility itself in order to give us how much we should be willing to risk in each ticker, how much room we should be giving each ticker to breathe, right? A more volatile ticker is going to get a wider stop loss just because that's how wicky it can be, while as a more, a tighter moving will get a tighter stop loss, not necessary to give it as much room to breathe. That's the strategy. There is a couple of other parameters though. If you may notice this blue cyan line on the chart, this represents the highest point of the last 3 days. So the close of the bar that you are looking to enter on also must be over the highest point of the last 3 days. This is important because it's once again, it's showing multi-day strength. It's showing we've already run a scanner that's returned us stocks that have been strong for multiple days. We want to make sure on our entrance that the stock is still remaining strong as well. So this, of course, right out of open here, BLNK, met all these. It got long at the close of this candle, 424, when the RSI crossed over 40, above the highest point of the last 3 days. Did pull back slightly, really nowhere near our stop loss, though. I should touch on this as well. It must close below this line. It is a close below stop loss. And then it curls up, breaks over 60 on the RSI, gets out at 444. Let's look at some more examples. If you want direct access to both the scanner and the strategy that I use for this strategy so that you can automatically see this setups within your own Thinkorswim platform, they are already available on my website, daytradingstrategies.net. Runner's reversal is right here. Link at the top of the description down below. Let's talk about another exit, which is potentially obvious seeing as this is a day trade strategy, but I just want to showcase it working within the code. It also gets out at end of day. So on this stock, TUP, this is Tupperware back in July when this stock was extremely strong. It was above the highest point of the last 3 days. It dipped below 40 on the RSI. So when it crossed back above, when you had a candle come from below to above 40, it got long, and it never quite got back to 60 on the RSI, but it also never got stopped out. So it just rode it until end of day, ended up getting in at 279, out at about 3. Not too shabby. And if I go ahead and zoom out on this stock, you can see an example of a stock that the strategy just owns, right? Here's another example. Dip below highest. Let me start here. Higher than the highest point of the last 3 days, below 40, curls back up, begins its curl back up, right? We're not just looking to buy weakness. We don't want to end up getting caught in the weakness that I showed like on AMC and Block at the intro of this video, just buying dips, hoping they turn around. Wait for dips on strength, on multi-day strong stocks. When they begin to curl back up, get long, sell when they show strength on the relative strength index over 60, get out, lock in profit. Here is another example. It's a very nice example, and this is a good example as well of it flirting with the stop loss. It touches the stop loss, but it does not close below the stop loss. It must close below at entry price minus average true range multiplied by 2, right? So got long, curled, started to curl back over 40, got long, curled up over 60. Very nice trade there. And then one more small one into the end of the day. I was about to click away from this stock and move on to the next point, but I want to talk about this. So this was trading Tupperware in July, and then you will see it did not trade it anymore. I should talk about this, and this should be applied to every single one of your strategies. You cannot build a strategy around a scanner of strong stocks and not include the same parameters from the scanner into your strategy, right? So the strategy is only taking trades if the same parameters that are met from the scanner, which we mentioned at the intro of the video, are also true. Because what you don't want to have happen is you're scanning and you're pulling data from stocks that you know are really strong, and then you're running strategies against that. Of course, the strategies are going to work very well. You're running it against stocks that you know are strong. That would just be simply cheating back testing, right? So whenever, let me start from the top. The way you should go about making a strategy: have a theory. What do you want to trade? What's a pattern that you think you recognize in the market? Second, create a scanner. Create the scanner second to return the types of stocks that you want to see. And then third, make your strategy. But 3B, ensure that inside of your strategy, you are also only taking the trades if the scan parameters are correct, so that you're not cheating your back testing. And as always on this channel, it's transparency time. We don't ever pretend on this channel that our strategies always win. I always make sure to show you at least a losing case, because as always, every strategy is going to have losers. There's no such thing as a strategy that always wins. I wish there was. We would all just learn that. We'd all have Ferraris, right? But that does also take losers. So let's talk through one. This is on Carnival, obviously multi-day strong. This was back in June, multi-day strong over the highest point of the last 3 days. Dipped below the 40 RSI, curled back above, got in. The trade started very nice. but it never got over 60 on the RSI. Never got over, even on these bounces, didn't get over. Eventually ends up closing below the entry price minus ATR times 2, which you will notice actually as the stock sort of chops and takes longer to move. This is, of course, lower volatility periods, so the stop loss is actually tightening up during this time a little bit. As the stock is getting less and less volatile, the stop loss is moving up to track that in order to get the stock doesn't need as much room to breathe if it's less volatile, right? So that's a nice indication of how the stop loss works, but does eventually end up closing below it, does eventually end up taking an L on this trade. Alrighty, so that is a walkthrough of my runner's reversal strategy. Once again, if you would like access to the scanner and the strategy and all the code that comes with the strategy so that you can run your own testing, do your own optimization, maybe just pull some parts from it that you think might work in your own trade plan, all available on my website. Link at the top of the description down below. If you guys made it this far in the video, you obviously enjoyed it. Please scroll down, hit the like button. It actually does help. And if you've made it this far and you're not already subscribed to the channel, why not subscribe? It's free, and I'm always walking through profitable strategies like this on the channel. With that being said, I'm going to go ahead and sign out of this video, but I'm going to link a video here that deals with the same scanner, but of more of a continuation strategy version.